Rates&Lanes Podcast. I'm your host, Rico Muhammad. Be joined here shortly by my co-host, Mr. Chuck Snow. And hopefully we're working on trying to get Tommy Rook up and on board. That's why we're running a little bit late tonight. We're trying to get our special guest, our insurance specialist, having a little bit of a technical glitch with his connection. We're trying our best to work that out. Um, but in the meantime, in between time, let me get over to we got him in there. He got it popped in. He just popped in, so that's a good thing. I don't even have to reach out to customer service. That's a good thing. So let me just jump into what we how we normally start off the show. This week we're showing that the average price of diesel fuel remained unchanged. We're showing that the national average for diesel still sitting at $4.91 per gallon nationwide on average. There's no change since last week. Increased truckload capacity leads to lower spot rates. Truckload capacity continued to loosen on the spot market last week. Diesel prices have also tapered off just a little bit from their all-time highs, removing some of the added pressure on truckload rates. As a result, the national average spot rate for all major trailer types fell last week. And let's jump over and show you guys. I'm going to try to get in here and share my screen so that you can see what I see. There we go. And for dry vans, we're showing that the national average out of the northeastern corridor checks in at about $2.44 per mile. Moving out of the mid-Atlantic and southeastern states, we're showing that an average outbound spot market rate for dry vans at $2.80 per mile. Climbing back up into the Midwest, we're showing that average outbound spot market rate checks in at $2.78 per mile. Moving out of the South Central region, the average is $2.74. And wrapping up, coming out of the West Coast, we're showing an average outbound rate of $2.63. Jumping over to the skateboard or flatbed portion of the report. Coming out of that upper northeastern corridor, we're showing an average outbound rate of $3.36. Moving out of the mid-Atlantic and southeastern states, we're showing average flatbed rates at $3.77. Moving up into the Midwest, we're showing that the average outbound rate for flatbeds is at $3.64. Coming out of the South Central region, we're showing an average of $3.46. And wrapping up, coming out of the West Coast, a paltry $2.97 per mile for flatbeds. And jumping over to the division that's near and dear to my heart, the reefer or temperature controlled division, we're showing that the average outbound rate coming out of the Northeast is at $2.62. Lord have mercy. Moving out of the mid-Atlantic and southeastern areas, we're showing an average outbound rate of $3.08. Coming out of the Midwest, we're showing an average outbound rate of $3.14. Coming out of the South Central area of the United States, we're showing an average outbound rate for reefers at $3.16. And coming out of the West Coast, we're showing that average checks in right around $3.10 per mile. And with that being said, let me stop sharing the screen now, and I'm going to welcome my co-host in. My co-host slash technical guru, Chuck Snow. Good evening, Chuck. How are you?
I'm well, Rico. I've been called everything in my life, but never a technical guru. You'll certainly, if any of the traffic staff is listening to this, they'll be laughing, as will my family, because technology and Chuck aren't always on the same page.
Right. Well, I tell you what, I'm glad we was able to work it out, because I love it every time we get to have Tommy on board with us. But before I bring Tommy on, I just wanted to I was reading the trend lines from DAT, and I think one of the biggest things, ladies and gentlemen, I just want to say this: when it comes to, we got to get back to learning negotiating. Make sure we're doing some reading on negotiating and things of that nature. I think one of the major things that have handicapped us when it comes to, if you're dealing strictly primarily on the spot market, of course, that's not the best way to actually run your business. But if that's your if that's your situation. You got to learn different negotiating tips, and you have to stop just settling for. I think one of the things that handicapped part of our industries is these apps on the phones that where you just accept the rate or just accept whatever it is that they're giving you. You got to be able to try your best to negotiate some type of leverage or some type of rate increase, and also make sure that you get your terms and conditions inside of those contracts as well. When you just clicking a button on a phone or just accepting something via email without having the ability to negotiate, you're definitely setting yourself up for failure, and you're actually in a race to the bottom. So I just want to implore our listeners to continue to start, go to Audible, get you some books on negotiating. Those little things, little tips like that you slowly over time, if you continue to brush up on them and use them, they'll become a real valuable tool inside of your tool belt. All right, I can get off my soapbox.
Great. You know what? I just want to back up what you said. I think you're 100% right. The problem being is that when it's not your sandbox and your baseball and your glove and your bat, you can't really make the rules. And that's the problem with the spot market, especially right now. And I know that there has been a windfall in the last 20 months or so, or 30 months on the spot market, which has changed drastically. And now all of a sudden the spot market has gone the other way. And unfortunately, I don't think when you are stuck in an area like Odessa, Texas, and there's 100 other trucks and there's 3 loads, that doesn't leave you much room for negotiation. And that's the problem. And I think we need to, our listeners, if they're smart, will get the hell out of that whole spot market thing, because that's the race to the bottom, because you can't even use your negotiating skills in this particular market. In the market we just came out of, if you were a good negotiator, I think you could do even better than the guys that weren't good negotiators. But when all of a sudden, when we're starting to see freight volumes compress and rates compress, the guy with the truck in an unfamiliar area, he's at a complete disadvantage.
Right. Stephen, to answer your question, one really good one is a book called "Never Split the Difference" by Chris Voss. That's on Audible. I'm on my Audible account right now. That's a really good one. And let me see here. I'm going to find.
What was the name of that fellow that taught negotiations at Kevin Rutherford's?
I can't recall.
George, wasn't it?
I can't recall his name.
If anybody listening, took that negotiating course that George had offered, and he was doing one-on-ones, and he was doing a great job. He did very well for himself too in life. Can you just let us know, because he was excellent.
Right, but that one, "Never Split the Difference," is definitely a good one by Chris Voss, and I'm looking for. I got several in my library is so big. I got.
Well, you know what, our guest Tommy Rook, before he got into being Professor Truck Insurance, he sold insurance. He probably knows a thing or two about negotiating. Hi, Tommy. How are you?
I'm doing well, Chuck and Rico. Glad to join you all again. I'm sorry all the technical difficulties.
No, you know what? It's always great to have you on the show, because
you got to remember my extent of Texas technology is back in college when I was at 16, 20, still had the cart punch. So I had to do. And don't go to a desk. Think ahead. This is where you got to think 2 things: what's my position, and when to say no, and hold your ground. Which means you got to be financially strong enough to say no.
You know what? The
other thing is, The other thing is
Tommy
to go ahead, Chuck.
No, Tommy is the son of a very, very well-known trucker in Florida, late Merle Rook, MT Rook Transport, and Tommy knows a thing or two about the trucking business. He was reared in it.
Well, I
Son of it,
definitely
yes.
let everyone know, our listeners know, if you got any questions, we're going to try to tackle and pick Tommy's brain a little bit tonight. If you got questions concerning truck coverages, whether it be what type of insurance should you be getting, and all the different nuances, claims, all that type of stuff, Tommy can kind of go a little bit deep into it and help demystify some of that for us and help explain it to you. So if you got questions about insurance or about your insurance in particular, or if you're coming up on a renewal and you need some tips and some advice on what you should or shouldn't be doing, you always feel free to join by putting your question down in the chat, and I'm going to add a link if you want to come on board and join us via video. I'm dropping the link right now in the chat. So if you want to come up and on board, that link right there that I just posted, you can come on board and you can come and talk with us as well. But until then, so Tommy, I was just talking about, here's one, Tommy, maybe you can help with this one. Because I read this in a Facebook group, and they was talking about progressive insurance. And they was talking about how a lot of people have progressive insurance and fail to realize that it only covers them for a 500-mile radius unless otherwise stipulated, if I'm understanding that correctly. Maybe you might be able to kind of help us understand a little bit about that. I'm not sure, but I know that was just something that I seen in a Facebook group, and I figured we'll throw it at you while we're sitting here talking and chatting it up.
Rico, I would question that in some point. For auto liability, most companies in this marketplace do not have a radius limitation on it because you got to file a 91X and MCS 90. So if the insured goes out of those radiuses, you still got to pay the judgment rendered against that insured. The radiuses become more of a rating factor.
Right.
And so if they spend time beyond that, it might cost them more dollars. Now, there are radius factors for physical damage because then you don't have to have the problem of the federal financial responsibility requirements where you got to pay even when the insurance company has to pay the judgment even when there is no coverage in it. I don't know that per se. I know a lot about Progressive. I've been up to Cleveland a couple of times. I talked to them about it. That very honestly, I've never issued a Progressive policy. I will tell you though, this from the market standpoint, Progressive is writing about a third of all motor carriers today in the marketplace.
Of all sizes, Tom, or just smaller ones?
Smaller ones.
Okay.
That's what their forte is. That's all these new ventures, of which they're only retaining about half of the new ventures over 18 months. So this is the marketplace that we're dealing with. We just did some studies on that part of it. And actually numbers have grown. It might be interesting. 91.1% of the people with MC numbers have less than 20 power units. 86% have less than 5 power units. So it's still a proliferation of these smaller motor carriers, which goes back to what you and Chuck were talking about, depending on the spot market in these areas, because they can't offer the customers the service that the customer demands and the guarantee loads from the customers and also guaranteed to have the trucks there just because they got 1 or 2 trucks. So I think we're in an evolution in the marketplace in trucking that way. And I don't know what you guys feel, but it's a real concern right now.
Well, I think we're definitely I think things are evolving very quickly in the trucking industry, from one end to another. We had a guest on a couple of weeks ago who is, her organization is Lindsay Trent, and and her organization is really pushing to bring on younger drivers. And we're talking about the 18 to 21-year-olds. And, there's no way you're going to take an 18-year-old, or even in this market, a 21-year-old, and just set them loose and say, you know what, you're leaving Florida today. You're driving up to New Jersey. We expect you there on Thursday night. You unload.
Chuck, is
and
this
then
Lindsay out of Next Gen? Is that her program?
Yes, that's it. Yes.
Okay, I had them on one of my truck stops. The high school teacher out of California that she referred me to on that, and that's a good start. But the problem is that the insurance companies, and we talked about that. I'm doing a class right now. I got 50 people, underwriters. We're virtual here talking about underwriting this, and obviously this came up yesterday, expanding the marketplace. The problem is even the pilot program that's a part of the infrastructure bill is limited to 3,000 in the criteria.
Right.
Now, when you look at the criteria, they have to have 400 hours of training before they can do it, 200 hours of supervised training in the vehicle itself, a anti-collision or a collision avoidance equipment on the truck, a speed limiter at 6 to 8 miles an hour, all those kind of things, and you only can have 3,000. Now, so the thing is, and what I feel, and my foundation to some extent feel, is that we got to do something to expand the driver pool. This is one way to expand the driver pool that allows that. But we're 4 to 5 years away from that being an insurance product for people who are buying first dollar coverage with Progressive and some of the markets who you represent.
Right.
When you look at it, the people that are going to do this are the big trucking companies.
Of course.
And they're going to take a game on. Right, Chuck, and they're going to gamble on this because, and an insurance company, if you give me 3 18-year-olds and you got me 1,000 drivers that are good, I'm willing to take that risk, particularly since you're responsible for the first $1 million of a claim anyway. So this is what we're dealing with. But now that driver 18, when they get 21s, will have 2 years experience. Now we'll insure them. That's going to be the factor that all this new stuff is. We're actually going to do a session at an annual conference in October 5th and 6th on expanding the marketplace to expanding the driver pool. And I've got Ellen Boyer, the president of Women's in Trucking, and Tom Bray with J.J. Keller about this part, talk about how the diversity and how we've got to expand diversity. But that's also going to take more modeling of the motor carrier business, because they're going to have to figure out a way to get the driver home more often. They've got to give them more benefits. And Chuck, it's going to be a struggle to do that, but we definitely have to do this kind of stuff.
Well, we have to, because we are, we've been saying it for years, but now it's really happening. Our driver pool is actually, number one, they're aging out. Number two, they're not interested. People aren't interested in the long distance stuff once they've done it a couple times. It's lots of fun. Your first trip going from Toronto to California or Florida to California, but after the third or fourth time and missing your wife or girlfriend or your friends, and not being able to participate in all of the social activities that young people want to do. That's just going to change the industry. I just see something here, Tom.
Yeah, I read Bruce, thank you for responding on this part of it. And again, it's a card of premium. I would still want to look at that exclusion to see if it really says we're not going to pay a claim if you go over 500 miles. And in our theory, the way we read it, since you have the public financial responsibility, and most insurance companies don't put those kind of things in, but it is a function of rating. And it says here, each car you $750 more to go to 500 radius. So that's a premium concern. The 80% rule is there. I don't know how you would ever prove the 80% rule. I do believe that you did the right thing and was prudent, not gambling on it, and went ahead and paid the $750. That's the thing I would strongly recommend. I don't know if Bruce can send you a copy of that radius limitation endorsement on their policy or not. And Bruce, if you're listening to me, my email address is my name, Tommy, R-U-K-E, one word, Tommy Rook at AOL.com. If there's any way you can email me that radius restriction, I will respond to you and tell you what my opinion is, and I'll even contact. I know the people at Progressive and find out how that's implemented. But that's the concern I have, is that even though there's one, they still have to respond to it, and rarely they do this. But again, they might adjust the premium,
right?
Like they did here.
Well, I know every year when we negotiate our insurance, they want to see where we're running. They check our IFTA reports. And they, there's certain jurisdictions, as we all know, and Tommy, you probably, they're probably on the back of your hand, where truckers really don't want to run a lot of miles because of the litigation involved in, or the chance of litigation in those particular areas. And the insurance companies charge you a premium if you've got a lot of exposure in those areas.
Right. I will point out one other thing to Bruce. Bruce, if you bought into their program, and I think it's a good program for you sharing your ELD information with Progressive. And this is where Chuck just mentioned that. The ELD information that you're sharing with Progressive is going to tell you where you're going. And that's why they can monitor this kind of stuff.
Yeah, I think it's funny, Tom.
And as Bruce has said, my agent didn't say anything about coverage not being valid anywhere I was traveling. That's the point here. I think it's a premium consideration, and if you go over that, then it's going to cost you more premium. I think that's going to be what we find on the bottom line. But now if you share this, and this is what more and more insurance companies are doing, Chuck and Rocco. In fact, I know a few who are filing rates based on where you're traveling.
Of course. And I think we're going to see more and more of that.
Absolutely.
And it's funny, and it's live. They're going to be able to see, as you're traveling through, they're going, oh my God, Tommy Rook, he only runs Florida. Look at this, guys. His truck is in, California or Alaska. What the hell is he doing there? And they may question you about it. And I think what has happened, and Tommy, I think you can vouch for this better than anybody. I remember being down at your conference probably 3 years ago, and the big word in the room was, insurance companies, and this is from some of the top brokers in the United States and even insurance executives, that they were very late to the table. They weren't there yet, embracing the available technology for the insurance business. Well, my God, that's changed. Our insurance company, they came to us last year and they told us what sort of cameras they wanted us to put in the trucks, and they actually worked out a deal on an experimental deal where they paid part of the expense. And
we did a case study in a class today, Chuck and Rico, you might be, where there was this risk on the major company, 38 power unit. They lost prevention people because they did some intercity work, suggested, even willing to pay for the event recorders, the cameras in the truck.
Right.
And the motor carrier refused to put the cameras in the truck, even though they were paid for. This motor carrier had a 16% loss ratio for 4 years. The insurance company non-renewed them because they didn't cooperate and put the camera in the truck.
Well, the cameras to protect the
That's the point. What they're saying is if they are that cavalier about not doing the technology that will help us defend them in court, we can't partner with them to go forward. And that's the decision that the underwriter made, walking away from a profitable business because of that. And I think we're going to find more and more of that. And what I'm finding, and we shared this before, Chuck and Rocco, most of the people you're listening to have less than 20 power units. Most of them have less than 5 power units. Would you agree with that?
Totally.
And so they're paying first dollar. They don't have the retention, Chuck, that you might have where you got 50,000, 100,000 self-insured retention, things like that. They're paying first dollars. The chasm, this gap between what a good risk is and what a marginal risk is widening every day.
Right.
And what's a good risk is the ones not only with good CSA scores, good driver retention, but all the technology. And every in the marketplace technology, if you're not willing to do that, you're going to pay 20 or 30% more than a motor carrier who's willing to do that.
Of course.
And it's there. I want to share something with you though that we've got to think about, because this is weighing in my mind, and it's come surface two ways. I was at a conference in Chicago Thursday and Friday with the American Congress of Transportation Attorneys, which is the number one attorneys in the nation. The one I referred you to, Chuck, Rob was there and had these people. And they did something because they're worried about defending the motor carrier. Right. So they did have an expert for jury consulting, which and what they have here is they also had on a plaintiff's attorney well known in the Chicago area. And what they do, and some of you seen the movie, what's the name of the movie that the jury won on TV now? Anyway, the guy that used to be on NCIS, that's a part of that show about how he vents the jury and he tries to do the jury. And what they do is focus groups. And what the plaintiff's attorney says, here's a focus group. What do you think this is worth? What do you think that? And they did a video of a focus group talking about a truck. And they had 6 people in there. And some of them said, how many of you have been scared with a truck on the highway? All 6 raised their hand.
Of course.
How many think truckers cut you off? All 6 raised their hand. And that's what jury. But then on Ellen Boyer's show Saturday, we had Steve Bryant with Blue Wire. And that discussion is how to change our image, how to spend money, change our image.
Bingo.
And the point is, I don't know if we can spend money to change our industry as such. What we've got to do is change the individual trucker to realize that they can't speed, they can't cut off, and then have evidence that they're not doing that so they can distinguish themselves from the people who scare them on the highway. And the only way to do that is have this new technology in the vehicle so the defense attorney can say, here's this motor carrier. They don't speed. They don't have hard brakes. Here's their electronic records of this stuff to dehumanize or humanize these drivers. There are people here that are trying to earn a living. They're worried about their lives. They're worried about your lives. They drive safe. So we got to do it. And it's very simple. One trucker at a time. I mean, it seems crazy. But how many times on the highway have you seen a truck with skull and crossbones on the front or jaws on the front?
And can you imagine, like I see some of these trucks and they're covered on the inside with all sorts of pennants and stuff.
Widowmaker mud flaps, and I saw I was driving the other day and saw on a billboard of a plaintiff's attorney that had a picture of a truck with the jaws on the front of it. We just got to have that image. It's got to change, but it's got to be one person at a time.
And you know what, Tom? We also, and I will call people out for this on social media. And the only one I'm really on is Instagram. And when I see, first of all, that people post these horrible accidents, and quite often it's truckers that post them. Number one, we got to stop doing that stuff. Number two, if you're a trucker and you're seeing another trucker do something that is not right, for God's sakes, man, don't be posting it on social media. It makes it hard for the good ones. It's just, you're shooting us in our feet.
That's big business now, Chuck. Unfortunately, me and another friend of mine was talking, with all this social media and TikTok and all this other stuff. I think that might be why some people are not generating as much revenue as they probably would like to. They're spending more time trying to shoot little reels and videos on the side of the road or at the truck stop than they are driving.
Yeah.
And if you ever have an incident of crash, don't post those videos. It hurts us. One of the things, and this plaintiff's attorney told us again, what they do is one of the first things they look at is the social media
Of course.
of the person who was involved in the crash. And this ends up in court. They don't realize how it's enough that they CSA scores are public. It's enough that the inspections that are they on the side of the road that are public, much less publish these other things that have nothing that to voluntarily show our industry is bad. It's crazy. There's not enough dollars to change that image unless every individual trucker wants to change that image. And the only way to do that, unfortunately, is live with the speed limit, keep your trucks clean, respect the four-wheeler, even though they cut you off, even though they cause 80% of the crashes because of our image in the industry, we end up buying and paying for those kind of things.
I agree. And you know what? The majority of the truck driving community is 100% professional. And
more than the majority, 90%.
Yeah, we're talking
the great majority. I mean, 80%. You pick a number of that level. By the way, that
it's
TV
probably
shows
like everything else, Tom. It's probably 95% are good, but we don't notice the good guys that are doing the speed limit, whose trucks are clean. We notice the guy that's got chrome up the wazoo, who's driving 90 miles an hour in the passing lane. He's got the skull and crossbones and all sorts of other stuff all over his truck, not representing the vehicle, the industry in the best light. We're trying to turn this thing, truck driving, into a profession, and these guys aren't helping. All those.
And the wheel lugs look like something out of the chariot race and Ben Hur on the side of it. But that TV show's Bull that does that jury vending part on CBS, that this guy does this part too. So they help them pick what jury should be on a show. But it's just a bad situation. And I don't know, Chuck, how many dollars. We cannot spend the dollars to make our image better unless every trucker wants to make their image better. It's a one.
Well, I think we need to probably, the Japanese have an expression that the longest journey begins with a single footstep, and I really do believe that what we need to do is, and it can start here. We need to start educating the trucking community that we need to be professional because it works for us. Years ago, we didn't have nuclear settlements and people celebrated people that were truck drivers. You had the utmost of everybody's respect. We were the knights of the road.
Right.
Now, granted, it was a different era, and truckers working for beer companies were encouraged. Actually, they got bonus for it up in Canada when they stopped and helped motorists. That doesn't happen anymore. Those things just, I often see trucks from the same company, and one will be broken down side of the road, and one of the other trucks will just pass the guy and leave him stranded.
Unfortunately, that is the case, but I don't know how how big of a factor do drivers feel the pressure of the electronic logging device?
Yeah, you know what?
Some people are under the crunch of trying to get the load there on time and in a timely manner, and the clock is working against them.
Well, you know what? You're right, Rico, and it's not just that; it's the pressure from the customer. Because darn well with some of these large customers, if you don't make that delivery on time, in the automotive industry is a great one. You close down, they want to work on a just-in-time basis in 1,000 or 2,000 miles away, and you close down an automotive assembly plant, and the fines are huge. They can bankrupt you.
Yeah, the penalties, not fines, but penalties built into these contracts are involved in this kind of stuff. But that in today's marketplace with congestion in the highway, Chuck, I don't know how a trucker can even predict for 1,000-mile radius,
You're right.
you know, to be there reasonably living within the 600 miles a day, 550 miles a day is all I can travel within 11 hours. And that's even pushing, working more than that my kidneys will allow me to work. and that span part of it. I do want to mention again, some of the physical damage prices have rolled back a little bit, and they're not quite so bad, but I still recommend all of your truckers listening to us to check the value of their policy for physical damage and what the limits you have, and make sure that that limit is high enough to cover the damage. They have, I believe today, maybe a little less, but when we were there a couple of months ago, absolute, that their greatest danger of going out of business is not a nuclear verdict, not a liability verdict, but ended up having a even minor crash in their truck. And the insurance company totals the truck, takes it, and takes the salvage, which they had the right to do because they're so grossly underinsured, as much as 30 and 40%. And that's where they're going to lose their dollars. They're losing all their assets. By the way, if they increase their rate, that the value actually, as we also talked about this at the program I'm doing today, every insurance company has a lower rate the more valuable the truck is. So they might be paying a 3% rate, right? I mean, a 4% rate, 5% rate per coverage now for $50,000. If they raise it to $75,000, that 5% rate might go down to 4%. So it won't be a doubling. It won't be the proportional that much on it.
Now,
so a lot of times, I want to go back over that point a little bit, because I've had this discussion with a couple of people. Because a lot of times people think that, well, if I leave my insurance coverage where it is, and if something happens, they have to go off of a book value and not necessarily the declared value that they have assigned to the truck. So just to demystify that is incorrect, right?
Rico, yes and no. Okay. There are policies, and the standard policy, your car policy, your car pickup policy, the local deliveries are written where the policy is based on original cost new, has nothing to do, and the recovery is unlimited. However, in the trucking industry, because there's no real thing original cost new, because a truck can be cost new vary from $130,000 to $150,000 between equipment, all that. What the insurance industry that riding trucking have a policy called a stated amount. The stated amount policy says all we're going to pay is the limit, period. So we'll pay ACV what it's worth, but no more than the limit. And most of the policies, the people who are listening here, there could be a few exceptions here, are based on that. So if the limit is all you're going to pay, and you have a truck worth $50,000, sure, for $50,000, and today it would not be unreasonable to be worth $80,000. Would you agree with that?
Right.
In the marketplace. So all you have, so let's say you got $30,000 worth of damage. Okay. So what the insurance company is going to do is write you a check for $50,000, take that salvage and sell the salvage for $35,000, because they can make it a total loss by just writing you a check and walking away from it. So that's the concern, that and you just sit there and give up the salvage. You have no rights for the salvage, and they can write the check, and then they own that truck and own the salvage, and then recover some of the loss of the salvage. That's where we are today with this part of it.
Our good friend Bruce wrote in, commented, says, I'm looking at the coverage limitations now. The payment of my equipment in total loss minus deductible is limited to the lesser of the ACV or stated value.
Or stated value.
So it's
stated value is the limit of the policy. ACV is what it's worth, but no more than the stated value. That's what I'm talking about.
Okay. Now, Tom, do you think?
So wait. I'm sorry.
Go ahead.
So he says ACV or stated value. So if
lesser of.
Okay. Okay.
Read that. The form actually says we pay.
I want to make sure. I want to make sure that we get it.
We pay.
Because I've heard some tales where guys have had to fight to get their to fight to get the total loss increased. They had to show different things to show that the vehicle is worth more, even though they may have had a stated value, but they had to fight a little bit, had to go a little bit back and forth with an insurance company to actually get all of the worth of the truck that they had that was being totaled.
Rico, that was a year and a half ago, where they're overinsured, and 80-90% of trucks were overinsured at that point in time. But in the last, and it's done down, it's changed a little bit because of used truck market values have gone down 15-20% in the last 2 months here because it's the demand of trucks. A lot of motor carriers are going out of business because you got in fact, I was with somebody today who writes a lot of trucks out of Charlotte, and they said that last month they had the most cancellation of policies than ever in their history. Wow. Meaning truckers are canceling their policies. FMCSA says there have been more authority revoked in March and April than in history. And the only way authority invoked is insurance being canceled. So this is what's happening. So now the pressure on the used trucks has slightly gone down. But most of the time, we're fighting to get the value of ACV up. You don't collect the limit unless the ACV is the limit part of it.
Right.
It's the lesser of that. Today's the marketplace, though, because the value is 30-40% more, like I just explained. What they're doing now is writing you a check for the limit and taking the salvage.
How often should we actually be evaluating and
today
trucks? How often should we do it?
Today, every time you read in Transport Topics about used truck rate and things like that, get that established. Normal times, only when you do a renewal.
Right.
But right now, I mean, we're in weird situation. I just was looking at your rate per mile. Okay. I was on this with you, 3-4 months ago?
Right.
Uh-huh.
That rate was $4.50 a mile.
Yes.
Now California is $2.30.
Yeah.
I mean, California is bad enough, much less have the less per mile rate. I mean, it's
all supply and demand. You know what? Right now, you've got local produce throughout North America.
And so that's, we're very unusual times right this minute. And this is
right. And like I've said before, this is one of the weirdest industries that I love trucking, but it's also a very weird industry because this is the only industry that I know of as a service provider. You don't get well, I'm not going to say you don't get to, but for the most part, we're dictated to as to what our rate is going to be versus us dictating what our rate is and putting it out to the public. A lot of times, because of the volatility and everything is basically a commodity in trucking.
Exactly. That's why.
So we have to deal with the ebbs and flows of the spot. Well, not necessarily the spot market, but I want to say the supply and demand. We have to kind of make sure that our pricing is in line with the supply and demand. But we don't. But like if you go to a mechanic or anything else, any kind of other service provider, they tell you, here's our rate, take it or leave it. And a lot of times
we commoditize this industry, and part of the way we've done that is we've removed all of the barriers, basically most of the barriers of entry. And we're, years ago, these, the licenses that you hold, Rico,
buy solar panels.
The interstate licenses that you hold were worth literally hundreds of thousands of dollars. And today, you could probably get them, get them for $600 or $800 or $1,000. And it's harder in a lot of jurisdictions to get a hunting license than it is a trucking license. So things have changed. And then we have factoring, which has allowed people to sell their receivables, and they don't have to have a lot of money to get into the business or to expand their fleet. And that's what's happened is we've commoditized it, and trucks are no different than bananas. When there's an abundance of bananas are cheap. And when there's no bananas, they're very expensive.
I want to also, Rico, mention, since Chuck mentioned that, the cargo part is also a problem here. And I'm paraphrasing our friend Hank, and we've had a little communication here, who damns everybody about cargo coverage and cargo carrier. But I'm dealing with a risk who took a load of, quote, parts to Whirlpool, and ended up those parts were items that went on a microwave oven, and the truck burned up, and the insurance company is denying it because it was electronics and they had electronic exclusion in the policy. Those are there usually for theft. This is burned up part of it, and it was factoring. So the motor carrier not only didn't pay, the broker did not pay him for that load. They held back all the money they owed him, which is up into close to $100,000 that had been factored. Now the factoring company is going after the motor carrier to recover what they can't get. So, this is the shippers and the brokers don't tell you everything you're hauling.
Yeah. And that's your job also as the, as the owner of your company or the custodian of your company, to find out what the heck is going inside that trailer, because there's all sorts of exclusions, and you have to know them. And again, it also goes back to what we talked about when I was down in Orlando, is buy your insurance from a broker that understands trucking insurance. Not a guy.
Those are the ones that spend 40 hours in front of me, Chuck. With a TR destination. Bruce mentioned back again, just reading what it has to do, the value here, the lesser amount value is involved in physical damage. They can have and do have radius limitations for physical damage. It's rare on liability, but not for physical damage part of it here, because there you don't have the guarantee to pay the claim if there's no coverage in the policy to protect the public. That's the big difference here that they have. And this is what Bruce brought back. Bruce, we appreciate you coming back.
And is that mostly a Progressive that does that, or that?
No, yeah, mostly no. Progressive might. Some of the less preferred insurance carriers will do that. Most of the standard ones would not. And I'm kind of surprised Progressive does. I need to look at the policy a little more, Rico, to really see what that does. But I will tell you that I would not be surprised about having a raised limitation on physical damage. I would be on liability. You follow what I'm saying? Right. Even though it would be rare in the marketplace to have it either one. It's mainly a subject of rating, which then is adjustable in the policy to up the premium if you go over those radiuses.
Right, because they want to insure somebody that's going from let's say Chicago to the tri-state area, Illinois,
right? Yeah, Indiana, and you go over 300 miles to 500 miles. I mean, most of the rating is 0 to 300, 300, 500, and over 500, and that would be regional trucking companies versus the national trucking companies.
Yeah, exactly.
And they have that rating mechanism that allows that.
Tom, what are you hearing from the insurance companies looking down the road? We're looking at eventually turning things over to electric trucks, and there's been some use of them on regional applications. But I think within the next 5 years or so, we're going to. I know that the big companies are getting forced to. I think it's within 5 years they've got to. I think it's 5% of their production has to be electric. They're not saying Class 8 necessarily, but when we're talking Class 8 trucks, these things where I think right now your standard truck is, let's say your standard fleet truck's 150,000. They're talking double. They're talking
300,000 for the electrical trucks.
What's that?
300,000 for the electrical trucks.
Yeah. So what's that going to do to people's insurance? If all of a sudden they're insuring a $300,000 power unit, rather than
increase their physical damage, and where now for 150,000, they should be paying somewhere around 3%, so about $4,500 for it. Now 300,000, they might be paying 6,000.
Okay. Well,
and so the physical damage part, and that would be the savings. And you're also going to have more limited people who are willing to write that high limits because, again, the catastrophic area would concern there, and they would go to special. But Chuck, again, the trucks that we typically insure, going back to how many trucks are owed for how many trucks are owed, or how many trucks a motor carrier has. When they got less than 20 trucks, they like this 5 trucks. It's gonna be a while before they go on electric trucks, Chuck, at that level.
Well, there was a guy. There's a guy that's only got a small fleet that's joining us, and he was all set to get one last week. I had to talk him off the ledge.
I have an adjuster here, John. Here, these are a couple of people. We're on a podcast, John.
Hey, John, nice to meet you.
And he's going to be a part of my program tomorrow. He just came in on the airplane here that was late, so I'm going to have to go buy him supper after we get finished. John, you do a lot of physical damage, right? Part of it.
We do some physical damage.
And we just talked about if it's totally uninsured, how some of our insurance companies are paying the limit and walk away and total and then take the salvage and sell.
You said totally uninsured.
I mean, underinsured. They're totally
different.
Yeah,
Right.
totally
Okay.
uninsured.
Yeah.
And they're paying the limit at $40,000 and then taking the unit worth $80 and selling the salvage and recovering $30,000. This is what they can do now.
That's right.
And so
I had that call just the other day.
So I'm just verifying that the guy does it every day, Rico.
If you were the insurance company, would you do that?
Probably to make the money. The other thing they said is that they got a Progressive problem here, and they found that Progressive had a radius limitation for liability. I find that unusual.
They had a what?
A radius limitation of the policy for liability. I don't see many doing that.
No,
Physical damage they might, but
Yeah.
not liability because the MCS 9091X. This is your experience handling claims, right?
Yeah.
Yeah. So you follow what I'm saying? I'm just getting
I
some
got
reinforcement of what we said from somebody who actually writes the checks, or at least works on behalf of the insurance company to come up with these things. So I thought
Right.
we just to reinforce what
So
we
you're-
have, and I'm more than willing to look at that Progressive policy here, that part of it. If we do
So
that.
what's happening here is people, and I know that happens all the time. People get their rate based on where they tell Progressive they're running, and they say they're running a 300-mile radius, and Progressive is quite happy with that. And then all of a sudden, Progressive gets wind that they're going 2,000 miles. There's going to be a surcharge on that.
Yeah, there's a premium adjustment, but not
Well,
not a
what
claim
my
limitation.
agent does is he has me, if I tell him what I'm telling the area that I run, he normally asks me for my my IFTAs.
Right.
Because you got to pay your IFTA by the state or whatever, so you can kind of determine where you are, where that's concerned. So that's one way that they I guess they.
Well, Rico, they do something different. They subscribe to this company, CEB, Carrier Software, and a part of the underwriting, what they actually get is a radius map that shows where your trucks were inspecting, where they had crashes, to see if they're within those radiuses that they say. This is what they do even more than the IFTA. Let's look at it, folks. Texas, what good is an IFTA account in Texas? El Paso is closer to LA than it is to Marshall, Texas. I mean, come on, guys. I mean, it's useless. This is why the ELD information is going to be so much valuable. And we're going to start capturing that stuff and use it for claims in other situations.
Of course.
When is that happening? Is that happening now, where the insurance companies are capturing the data on the ELDs? Is that happening?
Progressive is giving a credit for that. Canal gives a credit for that. And Progressive then advertises that on their radio. There's 2 or 3. Every one of the new markets, Chuck, has a technical play in it, where they're going to access the ELD information. They're going to have cameras both forward and back. They're going to subsidize those. They're going to get that information. So what we talked about in a class today is the underwriting is moving from reactive to proactive. Reactive meaning we look at the point in time, MVRs, loss records, CSA scores to make a decision. That's how we've done it forever. But now, since the LOD tied to the ECM can tell us what the truck is doing every day, including the serial number of the truck, they're moving to that as a part of the underwriting management part of it, and going to start demanding that part of it.
So
to go forward. Now, the problem we have is right this minute, No insurance company knows what to do with all that data.
Right. So
They
I
don't know.
remember when they
They're
first
trying to figure it.
Well,
came
they're
out.
going to need staff.
Yeah, the staff, they're trying to figure it out. And by the same token, it was kind of funny. I was with the National Council of the American Council of Transportation Attorneys in Chicago. You probably know. I was there Friday and Saturday, and they were talking about all this technology, how it's being used in court, how to protect it. So, and today in our class, we're talking about how all this technology we can use for underwriting. So both sides of the equation are talking about the same thing to determine what to do that. So this is where we are.
Man, business is picking up here at the end. I remember when they first came out with the ELDs and everything. We were wondering, is this going to be a ploy for them to begin to start pushing out the older glider kits and the older trucks that don't have they have this operating on the exemption where they don't have to have the hookup of the ELDs? Is this something?
Rico, John wants to say something. Go ahead and say it real quick.
There's two words I hate to hear because I hear it too often. It's the nuclear burden stuff, right? So insurance carriers, underwriters are looking for any means to, reduce that possibility. You got the law of large numbers, right? 95%, 98% of losses are not catastrophic. But you got to know that I'm going to drop it down to 50% of all claims is where plaintiff attorneys think they can hit a home run. So underwriters sure as heck are going to want all this data and want cameras. It just stands to reason. When you say, they want to push out, the older trucks, et cetera. Yeah, because they're having their hat handed to them. And I'll talk about this the next couple of days. Motor carriers themselves and claim departments are not prepared for the landscape of litigation.
Right.
And we just aren't.
And we got to change the method to humanize the driver and to do this. We talked about earlier about the bad image where up there they were doing a focus group and who was afraid of a truck. All six of them raised their hand. Who's been cut off a truck here? But we got to do it individually, one truck at a time. Because I also listened to Ellen Vorier's program on Road Talk Radio the other day, and they were talking about improving our image. John, it's got to be one trucker at a time. You're not going to improve it beyond that.
Yeah, and I want tort reform too, and that's not going to happen in my lifetime. So let's get real about every accident, every truck, every driver. It's got to be that in the micro. It's got to be that kind of focus.
Yeah.
Bruce, do me a favor. If you can write down, my phone number is 239-292-6929, or the email address tommy@mcif.org or tommyrook@AOL. I want to communicate with you because of this part of Progressive. And you bring up a point here. When you update the 150, be careful what cargo you put there. Like you mentioned, Progressive says that now you're hauling fresh fruit, which comes in a different rate category. So yes, they're going to up your cargo rate because of that part of it. Okay. The point is, when you update your 150, you only want to put in there what you intend to haul, not what you hope to haul, not what you want to haul. Because the only people look at that is the insurance companies here, and this is kind of the action. And your agent might be good, and I appreciate you having a long-term relationship and you like them, but if they don't help you on these kind of things, then I'll refer you to one. Don't worry about me. I'm never going to sell you anything. I'm never going to sell anything to you. I'm here just to provide information. I have made my money, Chuck, as you know, this kind of stuff. I'm here trying to help the truckers because of my history of my father being a trucker, and I love the business, as you well know.
The point that you just made, though, Tommy, that's something that I haven't heard before when it comes to that MCF, the updating the biannual about making sure, because a lot of times, people they'll get that thing and, especially one truck, Charlie, I'm going to try to get this freight. They go in and they check all the boxes.
Right. But they got to realize nobody looks at that but the insurance companies. Right. Nobody looks at the 150 for cargo but the insurance companies. Nobody else cares unless it's
you're paying for stuff you're never going to load.
Bruce, my phone number is 239-292-6929. 239-292-6929, and more than one happen. But this is what the agents got to tell them.
Right. Well, Tommy, we appreciate you I'm looking at the clock. We got on a little late, but we're running over a little bit right now. But it's always a blast whenever we can get a chance to get you on here and pick your brain. And then you always bring so much value to us. You even had gracious enough to bring in one of your sidekicks there. And and excuse me, sir. What was your name again? We might as well give you a plug while you're here too.
John Libertor.
Yeah.
All right.
Company is Primacy, Primacy Risk Services.
Yeah, he does the claims and loss prevention part for motor carriers. This is what they specialize. And I have him, we're going to do coverage seminars the next 2 days, and I'm going to have him talk about how the coverage and then how the courts handle those coverages. It's covered.
I'd love to be there. It's got to be fascinating.
It is. Well, we try to. We got about 50 people taking this course virtually.
I'm putting your information back up again, Tommy.
Yeah, this here, if you look at here, Bruce, the website, MCA.F, you can just send an email that also ask Tommy or send it there. That's the foundation I started, and they can get me that way too if you don't want to call me, and we'll do this. But any of your audience, Chuck will tell everybody here, we'll give you a straight answer. I have no biases.
I'm not selling anything to anybody. A lot of times insurance agents and brokers try to sell you stuff. Tommy's the guy that probably started the giving back. And Tommy did well in this industry. His family has, and he's giving back. And it's a lesson for all of us.
Okay, guys.
Tommy,
thank you, Rico. Anytime, Chuck. Anytime, Rico.
God bless.
Appreciate it, Tommy.
I'll be back here, boys.
Thank you. Thank you,
sir.
Take care,
Bye-bye.
guys.
All right.
That was great.
That was action packed. Really great information. So if
What
you want
a wealth of, we got to have him on more often because
the website, his website is right there. I got it pinned to the chat. You can take that down. You can go over there and check everything out over there. You can send them an email or whatever and just check out what all they have to offer over there on that end. Thank you again, ladies and gentlemen, for joining us on the Rates and Lanes podcast. We do this show for you, and we try to make sure that we bring you valuable information, things that you may not be able to get readily available anywhere else. We try to help facilitate that and bring that to you here on this podcast and give you more information so that you can have good tools to go in your tool belt. So with that being said, ladies and gentlemen, God willing, we want to thank you again for taking time out, for hanging with us. You could have been anywhere else in the world, but you took a little bit of time to hang out with us. We're always eternally grateful for you doing so. So for Tommy Rook, my co-host, Mr. Chuck Snow. Chuck, you want to tell? I'm jumping ahead of myself.
That's okay. Number one, if anybody needs to get hold of me, just send me a quick email. It's probably the best way, chuck@Traffix, TRAFFIX.com. If you've got any questions about anything in the trucking industry, I've been at it for 48 years. Or if you need to get set up with one of the offices at Traffix, let me know. Or if you're having some questions or challenges, I know this is not an easy business. It gives me an opportunity to give back. And before I forget, next week we're having our good friend, the Grumpy Pete, aka Dean Croak from DAT, is joining us, Rico. So it's going to be another great show.
All right. I love it. So
action packed for our listeners and for us too.
Absolutely. Absolutely.
Rico, with that, I'm going to let you back her in a hole for another week.
Yes, sir. Yes, sir. Thank you.
We can park right beside this, between this Werner truck and this Swift truck.
Well, I don't know if we want to park.
Leave a little bit of room next to the Swift.
We might have to go make a parking spot if that's the case. But ladies and gentlemen, we want to thank you again. Be safe out there. Stay healthy. Keep it in between the mustard and the mayonnaise. God willing, we'll talk at you same time, same place next week. God bless you and good night.
Catch you on the flip-flop. God bless.